everyone, and thanks for tuning into the Financial Investor channel. My name is Brent. Today we're going to be covering 5 stocks with ex-dividends next week. So we're going to be covering the week of October 16th through the 20th. So I'm going to try and make this a very quick video, 5 minutes on each stock. Hopefully or less. I do have 5 stocks for you guys. We're going to be talking about whether they are overvalued or undervalued. We're going to take a look at their 1-year, 5-year growth, take a look at their max growth, see if they are resistant to recession proof. We're going to take a look at their payout ratio. Can they continue to pay out what they've been paying out in the past? And take a look at their dividend history. How long have they been paying dividends out for? And can they continue that? So we'll try and make it through this pretty quickly. And the very first one is called McGrath's Rent Corp. And the ticker for this is MGRC. Now, taking a look here just very quickly, we can see that the price is currently $45.90, where the average would sit right around $37.50. So it is slightly overvalued at this time. You can see where the yield would normally be sitting at a 2.75 and at a high point of over 3.35%. It's currently sitting at 2.24%. So at this time, the stock does look slightly overvalued. Now let's take a look at its 1-year and 5-year. So MGRC stock. And of course, if you are brand new to my channel, I do make financial, stock market, investment videos weekly. So do consider subscribing for future financial videos. So let's take a look at its 1-year. How has this growth been? It's had excellent growth in the last year, over 47% just in this year alone. In 5 years, it's had 75% increase. So 75 by 5, I believe that's, what's that, like, I don't know, 75 by 5, that's 15% average per year, along with a dividend yield of 2.26%. Now, it doesn't say here, but McGrath Rent Corp, it's a rental and sales relocatable modular buildings and electric test equipment. So they actually rent out these modular buildings that are able to be sort of, you rent them, you move them where you want, and you could test equipment or you set up your own sort of stuff on site. And it's primarily in the United States, so it does do a lot of electronic test equipment. So it does look pretty nice. You know, it's founded back in 1979. So let's take a look at its dividend information here. So MGRC. And also, just really quickly, I just want to take a look at its max. So back in 1979, it did start. This graph doesn't go all the way back. One thing I wanted to take a look at here was it wasn't affected by the 92-2000 crash, but it was affected a little bit here by the 2008 crash. So it had a bit of a loss in 2007, and then another hit in 2008. And then if you were to have purchased it at the tip of 2007, it wouldn't have been until nearly let's see, we'll say 7 years until your investment would have evened itself out, and then at that point you would be up around 40% if you had just held that stock. So this has had dividend growth for the past 15 years, and I just want to check really quickly. So they may not have had any growth in the past. So let's see, where do they stop? So they did do a stock split. So since 2002, they've had dividend growth. So if I look at 2002, so there was a couple years, I'm not sure why it's saying, so this one's actually had dividend growth for much over 15 years. So they've actually had pretty consistent dividend growth. They've even had a stock split here where they did 2-for-1 and they increased their dividend. So that is very nice. So I'm going to go ahead and say that this company is very resistant to recessions. The financial and housing crash that took place, that may not happen again. You can see that in the 2000 crash, the .com crash, it wasn't affected. This sort of crash that took place with the housing market and the banking systems, that may not happen again. You can see here that the stock was overvalued at this time. If this was back down at around $30 range, that could be a great opportunity to buy into the stock, and then it would have very good dividend growth, a payout ratio of under 60%, Oh yeah, we're going to be talking about its ex-dividend date. So that is on October 16th. So that is on Monday. So you do need to purchase it on Friday or prior. And then you would be paid out this month on October 31st. So it does have very low annual growth of 2%. So again, I like to have my stocks with 5 to 8% dividend growth. I believe it's around 8, 5 to 8. We can see here that they went from, they are a quarterly paying stock. I'm going to go ahead and shrink this down so I can see when's the last time they increased their dividend. Okay, so yeah, as you can see here, they increased it from 25 cents to 26 cents. So 0.26 minus 0.25 divided by 0.25 times 100. And I don't believe that's correct. It says 4, so 4% annual growth. So they increased their dividend by 4%, if my math was correct on that. But they are a qualified dividend, meaning that the dividend that you receive will only be taxed at the dividend income bracket. So depending on what bracket you're in, you may be taxed 0% or 15%. Okay, so that was our first stock. That was McGrath's Rent Corp, MGRC, and that was slightly overvalued. I'm going to go ahead and mark it there. Next is PIR. That's Pier 1 Imports. This is a pretty known one. It's an importer of specialty retailer of imported decorative and home furnishings and gifts primarily in the United States and Canada. So its yield right now is sitting at a 6.73%. So this is currently undervalued, but it could be a value trap. You would just need to really do your research on the stock, take a look at its financials, its balance sheet, make sure that it has money on hand, because you can see that as of after the elections, it had a huge explosion from $4.50 and hit $9.50. So it had a 100% gain. It nearly doubled. It did double. And then ever since January, it's been on a downwards hill. It basically crashed back down and lost 100% of its value, or not 100%, because 100% would put it at, it would have lost everything. So actually, this was a 50% jump from $4.50 to $9. It's 50%. Boy, it doubled. So it would be 100%, and then it lost 100%. Anyways, let's go ahead and continue. Maybe it was 50% loss. It's a bit late, so let's go ahead and continue. So it's sitting at $4.15. So it does look like it bottomed out, and this could be the support line where it might be hanging out now. So this would be a great time to look at its financials, look at its balance sheet, see who the CEO is, what are his plans or her plans for the upcoming quarters, what are they looking to do in the future to increase profitability in their company, why have they fallen from $9.50 in January all the way to $4.15. So you would definitely want to do your research, but at this time the stock does look undervalued, but at the same time it could be a value trap where you put your money in and the stock could continue to fall down into the $2 range. You would just have to see and take a look at its information. So let's quickly take a look at its 1 year and 5 year data. So you can see that in the last year here, since after the elections in November, you can see November 8th was the elections, and it spiked up 108%, and then as of the spike, it has gone down 56%. So that's actually the correct math. It did double, or yes, doubled, which was 100%, and then it's lost over 50% since the $9.50 topping off. So it is currently sitting at $4.15. Its price to earnings. Its price to earnings is $11.45. So it is slightly, it is profitable, but at the same time, again, take a look at that balance sheet, take a look at the financials, and what it's doing quarter after quarter. Dividend yield 6.75. So very nice dividend yield, but at the same time, check out that information. So PIR. I'm going to go ahead and mark this one as undervalued, but definitely do more research. So I'm going to go ahead and take a look at that one a little bit further myself. Payout ratio is a bit high, 66% dividend growth for the past 4 years. Their ex-dividend date is on October 17th, so that is next Tuesday. So you do need to purchase the stock on Monday or prior. You would be paid out on November 1st. It's had annual growth of 3.7% in 2016. The last time it had dividend growth, it's a quarterly paying stock, so you can see here 2015 it was 7 cents, still 7 cents. So this information here says that it's had dividend growth for the past 4 years since 2013. But as we're looking here at this information, there hasn't been a dividend increase since from 2014 until 2015 they were paying 7 cents. They have only and continued to pay 7 cents since then, and they actually had they actually cut off their dividend during the 2008 recession. So this is not a recession-proof stock. They actually cut and discontinue increasing their dividends for the long term. So again, this could be a value trap. While they may have a very high yield, that could be because their company is not doing very well. And let's go ahead and continue on to our third stock. So that is Procter and Gamble. Procter and Gamble is actually, it sells its products in more than 180 countries, and that's something that I didn't know. I've actually looked into Procter and Gamble many times. When I started doing my dividend investing back in July, August timeframe, but they had such high swings that the price at the time when I was looking at it was still overvalued. You can see that since that time frame that I had looked at the stock, it has jumped up substantial. It's $91.62, so this stock is currently overvalued. One of the best opportunities to have bought this stock would be November, December timeframe, where it was sitting a little over $81 and you were getting a yield of 3.25%. Now if we take a look at its 1-year and 5-year charts, I believe Procter & Gamble didn't have very much growth. Yeah, 3.48% for its 1-year and 5-year. It's got decent. I think it's 35%. So 35%. So 35 by 5 is 7. So 7 to 10% is the S&P average. And this one actually does have a higher dividend yield of 3%, whereas the S&P 500 has a dividend yield of around 2%. So Procter & Gamble is still considered a good buy if you were to get in at a good price. And this September 11th, 2015 would have been one of the best opportunities to buy the stock at $68.42. So look for those buying opportunities. Definitely look for those dips, because Procter & Gamble for the long term, if you take a look at the stock, it easily recovers through recessions just with time. And then with that dividend income, Procter & Gamble, it's had dividend income for over 60 years. Well, its payout ratio is a bit high. It doesn't meet my criteria for a couple of reasons. At this time, it is overvalued on the price. It is resistant to recession. Its payout ratio is higher than 60%. It does have very nice dividend growth since 1957. If you want to get dividend for Procter & Gamble, you need to own it on October 18th. So you need to buy it on Wednesday or prior and hold it. You would then get paid out on November 15th. Their annual growth has slowed down substantial. It's at 1.5%. I like to buy stocks that have annual growth of around 5 to 8%. So that would not be one of the ones I haven't added to my portfolio for that reason. You know, there's a couple of reasons in there. Now you can see that they increased their dividend from 0.67 to 0.69 from January until April. So that's a pretty nice little jump right there. They are a qualified dividend. All of the stocks that I've showed so far have had qualified dividends. I just try and pick up stocks that have qualified dividends. So Procter & Gamble, it is resistant to recessions. It does have a high ratio. It's currently overvalued. So next stock is Hormel Foods. It's a multinational manufacturer of marketer and consumer branded food and meat products. So this one is currently undervalued at this time. So we go ahead and mark it undervalued. But at the same time, always do your research. Check its balance sheet. Check its financials. Take a look at its past quarterly earnings. how has it done, and take a look at what the CEO has in plan for the future of this company. You can see that it's taken a huge dive. It was at $37.50. It's now sitting at $31.75. So it's not a huge loss. It has gone down slightly, but it does look like it began to hit its support line, and it's kind of going up and down, and it's now having some resistance to coming back up. So it is currently undervalued at this time, but definitely want to take a look at its financials. The ticker symbol is HRL. If we look at take a look at its 1 year, it is down for the 1 year 16%. That's pretty huge. In 5 years, it's up 120%. So it's 120 by 5. That's 24% average per year. So this loss that it's taking right now, that's definitely it shot up huge to a point where it was definitely overvalued. You can see that it's trading at a price to earnings of 19.65 and a market cap of 16.7 billion. So it does have a very nice market cap. It was up at a peak of 205%. So that's very huge. I didn't expect that kind of growth from my foods company. So it did look like it bottomed out around $31.70. So that could be its support, and then it's kind of been trailing up and down there. So this could be a good buying opportunity on the next dip of hitting around $31. Between $30 and some change, so $31, that could be a good buying opportunity, and then holding it for that that dividend yield currently of 2%. So let's take a look at its dividend information. HRL payout ratio is very low, 43%. That means that they're reinvesting their earnings 50% back into their company. Actually 56% back into their company. They've had dividend growth for the past 50 years. One thing I didn't check here is how resistant is it to recessions, and it's very recession proof. You can see that none of the recessions had affected it very, very much. 2000 recession rolled right over it. 2008 recession, it did drop not very much, but you can see here it's had a huge spike in the last couple of years. So this, I'm not sure, this would be one you'd want to definitely take a look at their balance sheet and see what's changed in the past 10 years that's made this stock jump from a $10 stock to a $44 stock and then back down to a $31 stock. So this one does look at the time undervalued, but at the same time this could be a trap. This stock, if you just kind of look at its trending line, you would predict it to be right around this $15 mark. So this stock here could fall another 50% possibly, if not more, in the next recession or just in the future. Its dividend is on October 20th, so that is next Friday. So if you want to have dividends from the stock, you would definitely need to buy it on Thursday or prior, and you would get paid on November 15th. It's had annual growth of 45%, so that very definitely beats my my 5 to 7% rule. They did a stock split and then paid a 29 cents dividend per share. So looks like they do a couple stock splits here, and they have continued dividend growth. So if you were to buy and hold this stock for the long term, it is a great buy and hold stock for the long term if you're able to buy the stock at a good opportunity. So definitely want to do your research for the spike here. Why are they trading at $31.75? Because they do have a price to earnings of 19.65, so that could be a bit high. And that is it for that one. So that one is slightly undervalued, just kind of looking at the information that's provided. And our last stock is Colgate. So Colgate here is trading at $72.90. It's slightly overvalued at this current time. It has crashed quite a bit from July until now, whereas in July it was trading around $76 mark or higher. It's now at $72.90. So I believe I added this to my portfolio in the July-August time frame here during this dip. So I saw a good buying opportunity on this stock myself. I'm a holder, and I've continued to hold it through these bottoming out periods. Actually, I believe I bought a couple more shares on that little dip right there. So at this time, it is overvalued at this time, but again, Colgate is, let's take a look at its 1 year and 5 year growth. 1 year, it's kind of trailed sideways. It's had, for the 1 year, increase of 0.97. For its 5 year, it's had an increase of 35.15, so 7% average per year with 2, which is around 9% average per year. And max, so one of the things I had looked at on the graph here is how resistant is it to recessions, and you can see that 2000 recession, the dot-com, it did not phase Colgate at all. 2008 recession, there was a bit of a little dip here. You can see that it lost around 23%, but within a year or two, it easily recovered the loss and then continued on its trend up. So it does have a pretty high price earnings ratio of over 25. Its dividend yield is 2.19, and its dividend growth is 53 years of dividend growth, payout ratio of under 60, so it's currently sitting at 55.4. Its ex-dividend is on October 20th, so that is next Friday. So you do need to purchase the stock on Thursday or prior to be eligible for the dividend paid out on November 15th. It does have annual growth of 3.3%, which is a little bit below what I like to look at, but I made an exception here. Colgate was just a great buying stock at that on the dip, and I felt it was a good stock to add to my portfolio. That's why I had purchased it. Yep. So that is it. It also has a qualified dividend. So those are my 5 stocks. We have McGrath's Rent Corp, MGRC, that was overvalued at this current time. PIR, Pier 1 Imports, that was undervalued at this time, but definitely do your research on it. We have Procter and Gamble, it was currently overvalued. We have Hormel Foods, it was undervalued at this time. It looks like a good buying opportunity, has had dividend growth and a dividend payout ratio that was very nice, but definitely want to do your research on that one as well. And then we have Colgate, which was overvalued at this current time, but it does have good dividend growth and a good dividend payout ratio. So those are the 5 stocks. Hopefully they have been, hopefully that's been pretty informative. If you have any questions or want to say hello or just have any specific questions on any of the stocks that I have covered, I am a holder of Colgate and I am a long-term buy and holder on that one, so just for your information. If you have anything else you'd like to have included in these 5 stocks with ex-dividends next week, go ahead and leave that in the comments below. I try not to make it too dry. I know it is a bit dry at times, so I will try and work on that here in the future. Thanks for tuning in, and I will see you next time. Bye.